What if I told you the real wealth of the world, gold, resources, land, labor, was stolen, not by kings or armies, but by institutions that most people trust? No guns, no wars, no visible crime scenes, just numbers on screens and signatures on paper. This is the story of how central banks quietly replaced real wealth with promises, and how, without even realizing it, humanity traded everything of value for an illusion. And the craziest part? It didn't happen overnight. It happened slowly, deliberately, hidden behind complicated economics and political deals that shaped the modern world. This isn't a conspiracy theory. It's a history most people were never taught, because those who control the money control the story. Let's go back to where this theft began. Once upon a time, money meant something. A coin wasn't just metal, it was value. For thousands of years, gold and silver were the foundation of trade and trust. Empires rose and fell, but gold remained the great equalizer, something no ruler could simply create with a pen stroke. But then came the 1600s. Europe was expanding, trade was exploding, and wars were draining treasuries. Governments needed more money than they physically had in gold. Enter the Bank of England, founded in 1694, the first true central bank. Its promise was simple. We'll print paper money backed by gold. You can trust us. It's all redeemable. But that was the first illusion. Because over time, more paper was printed than gold existed. The promise was real, the backing was not. And with that, the world's first quiet financial magic trick began, creating money out of nothing. Fast forward to the 18th and 19th centuries. Banks realized something revolutionary and dangerous. Not everyone comes to withdraw their gold at the same time. So, why not lend out the same gold to multiple people and charge interest on each loan? This was called fractional reserve banking, and it turned the concept of wealth upside down. Banks were now literally creating money with every loan, not by finding new gold, but by typing numbers in ledgers. Each loan created new money in the system, backed only by debt. In other words, every dollar you hold is someone else's IOU. And with that system, banks didn't just hold wealth. They manufactured it and charged you for the privilege of borrowing it. This wasn't theft in the traditional sense. It was the quiet transfer of control from individuals and governments to bankers. By the early 20th century, the illusion was complete. Most nations had central banks, all operating under the same principle. Control the supply of money and you control the direction of economies. Then came 1913 and the creation of the Federal Reserve in the United States. It was sold as a way to stabilize the economy and prevent crises. But behind closed doors, the Fed wasn't a government agency. It was a private consortium of banks, granted the legal power to create US dollars out of thin air and lend them to the government with interest. Let that sink in. Every dollar the government spends is borrowed from the central bank, which creates it from nothing. And the taxpayers, they pay interest on that nothing. World War I, the Great Depression, World War II. Each crisis justified more printing, more borrowing, and more central control. By the 1940s, the Bretton Woods Agreement established the US dollar as the world's reserve currency, backed by gold. But in 1971, something happened that changed everything. In August 1971, President Richard Nixon appeared on television and announced what sounded like a temporary measure. The US would suspend the dollar's convertibility to gold. But that temporary move became permanent. The dollar, and by extension all global currencies, were now backed by nothing but trust. This moment marked the death of real money. Since that day, money has been pure fiat, meaning it has value only because governments say it does. And once that line was crossed, central banks unleashed the printing press like never before. Debt exploded, inflation became constant, and real wealth, the kind tied to labor, resources, and production, was quietly siphoned away. Because when you print money faster than the economy grows, those who hold the new money first, the central banks and major institutions, get richer. Everyone else watches prices rise, wages stagnate, and savings evaporate. That's not an accident. It's how the system was designed. Today, the top 1% controls more wealth than 99% of humanity combined. Global debt has surpassed $350 trillion, meaning there's now more debt than money on Earth. Every central bank on the planet operates under the same paradox. To save the economy, they must print more debt. But every new dollar created steals purchasing power from the dollars already in your pocket. It's a system that rewards those closest to the money printer and punishes everyone else. When markets crash, governments bail out the banks. When inflation spikes, they raise interest rates by crushing small businesses and homeowners, while financial elites move assets overseas. It's not a bug in the system, it is the system. Wealth isn't disappearing, it's being transferred. From the hands of the many to the hands of the few, who control the flow of money itself. Politicians promise solutions: stimulus, regulations, quantitative easing, digital currencies. But each so-called fix just tightens the central bank's grip. Digital currencies, for example, could give them total surveillance power, knowing where, when, and how every dollar moves. Programmable money isn't freedom, it's financial obedience, and every economic crisis becomes another excuse to expand control. 2008, 2020, 2023. Each time, the cure was more of the disease: debt, money printing, and centralization. The game never ends. It just resets with a bigger scoreboard. Look closely. The same pattern that began with paper promises in the 1600s is repeating today with digital code. Where gold once backed the system, data now does. And central banks are preparing for the next evolution: central bank digital currencies, CBDCs. They claim it will make money safer and faster. But imagine a world where every transaction is monitored, and your access to money can be turned off with a keystroke. That's not progress. That's the final stage of financial control, the point where the illusion becomes total. So what do we learn from all this? Money is no longer wealth, it's debt. Real wealth lies in assets you can touch, trade, and control yourself. Central banks don't just influence economies, they engineer them. Every crisis is an opportunity to expand their reach. The real power isn't in creating wealth. It's in controlling who can access it. History has shown us that when money loses its anchor in something real, societies drift toward inequality, instability, and ultimately, control. And maybe that's the plan all along. So the next time someone says, "It's just economics," remember, economics isn't about numbers, it's about power. The power to define what money means. The power to decide who wins and who never gets to play. If you found this story eye-opening, share it, question it, and keep learning. Because the first step to reclaiming wealth is understanding how it was quietly stolen.